the Monetary Policy Committee decided to hold an off-cycle meeting on 2nd and 4th May 2022 to reassess the evolving inflation growth dynamics and the impact of the developments after the MPC meeting of 6th to 8th April 2022. Based on this assessment of the macroeconomic situation and the outlook, the Monetary Policy Committee voted unanimously to increase the policy repo rate by 40 basis points, by 40 basis points to 4.40% with immediate effect. Globally, inflation is rising alarmingly and spreading fast. Global crude prices, that is crude oil prices, are ruling above $100 US per barrel, and they remain volatile. Global food prices touched a new record in March and have firmed up even further since then. Inflation-sensitive items relevant to India, such as edible oils, are facing shortages due to conflict in Europe and export ban by key producers. The jump in fertilizer prices and other input costs has a direct impact on food prices in India. Further, the normalization of monetary policy in major advanced economies is now expected to gain pace significantly, both in terms of rate increases and unwinding of quantitative easing as well as rollout of quantitative tightening. These developments would have ominous implications for emerging economies including India. Meanwhile, COVID-19 infections and lockdowns in major global production hubs are likely to accentuate global supply chain bottlenecks while depressing growth. In fact, global growth projections have been revised downwards by up to 100 basis points for this calendar year. These dynamics pose upside risks to India's inflation trajectory set out in the MPC resolution of April. Since the April policy announcement, banking system liquidity has remained comfortable. In fact, more than comfortable. Average surplus liquidity in the banking system, which is reflected in total absorption through the SDF and variable rate reverse repo auctions, that is VRRR auctions, amounted to rupees 7.5 lakh crore during April 8th to April 29th. Therefore, in keeping with the stance of withdrawal of accommodation and in line with the earlier announcement of gradual withdrawal of liquidity over a multi-year time frame, it has been decided to increase the cash reserve ratio CRR by 50 basis points, that is 50 basis points to 4.5% of net demand and time liabilities, that is NDTL, effective from the fortnight beginning 21st May 2022. The withdrawal of liquidity through this increase in the CRR would be of the order of rupees 87,000 crore. The policy decisions of today are aimed at containing inflation spike, are aimed at re-anchoring the inflation expectations. At the same time, the policy will eventually result in strengthening and consolidating the medium-term growth prospects for the economy. I am an eternal optimist. My colleagues in the Reserve Bank and I strongly believe that our chosen path will guide us to a better and brighter tomorrow.